And by the way, it's not supposed to be publicly advertised. Somebody asked me very beautiful question that why don't you, why AIFs are not so popular? Hello everyone, my name is Vikas Agrawal, and I'm the founder of AIF and PMS Experts India. Uh, well, today I am here to talk to you about what AIF PMS Experts India is all about, and also give you perspective about the history of AIFs and PMSs, their existence, the total asset size, the total asset under management, the different schemes, the importance of AIFs and PMSs in your portfolio, and why should you consider investing in alternative investment funds and portfolio management services. So we'll start the session. So when I laid down the foundation of this organization, uh, I wanted to kind of solve a problem uh, which would help eventually the investor community as a whole to enhance the overall experience of investing as well as the performance of the portfolio. So, after spending 2 decades in the industry, what I've realized is that particularly in alternative investment funds and portfolio management services is that there was a huge gap um, between the players, the asset management companies, and also a gap in terms of right kind of access to right kind of investors, like-minded investors. So we thought, what was happening is that they were good quality, deserving portfolio managers in India, and they bring about very, very consistent track record. But they did not had access to like-minded investors. On the other side, they were good quality investors, like-minded investors, but they didn't had an access to high quality portfolio managers. And some of the high quality deserving portfolio managers were only available on large platforms where the minimum ticket size used to start with 5 crores and 10 crores. It was very difficult. So because basically it was in the hand of large wealth outfits and it was privately placed. So we thought, why not, after understanding this problem, I thought, why not I would kind of build a platform, a sort of interface between and bring everybody on the same page, between between the asset management companies, the portfolio managers, and investors. So then that's how this AIF and PMS got originated, this idea. And as the name clearly indicates, AIF and PMS Experts India, we bring our own expertise of more than 50 years in alternative investment funds and portfolio management services space. When I say 50 years is, I personally have been into this industry all my life, did only one thing, which is alternative investments and portfolio management services. But then I have uh, now we are being joined by some industry experts and qualified professionals, and we formed an investment committee also, and I'll give you more details about that in the later stage. So we are now put together. The investment committee has about 50 years of experience. So idea is that how do we utilize this experience and reach out to more number of investors and help them create wealth. Because what was happening is that, uh, particularly in the AIFs and PMSS space, is that there were a lot of accidents taking place because some of the high net worth individuals, or even to an extent, some of the family offices, well, they were investing in those AIFs and PMSs based on their maybe last 6 months, 1 year, 2 year, 3 years of track record. But it's always those who have spent good time in the industry would agree to me on the fact that when you have good performing schemes this year or last year, it is not necessary that you're going to be a best performing very next year also. So it requires different sort of studies, and uh, to have that study, to have that expertise, it's very important that you create a different parameters through which you evaluate whether sometimes what happens is the performance comes because the luck is favoring the portfolio manager. But what you need to examine is the what kind of skill set and the knowledge and the process have put behind in order to ensure that the performance of the portfolio is consistent and sustainable. And that is where we put more efforts. So we said that, as the name clearly indicates, it's like a pizza hut. You go to pizza hut, you get pizza, you don't get burgers. Similarly, we thought when we are expert in AIF and PMS, why not we'll keep the company name as AIF and PMS Experts India. So we are our attempt is, as our tagline suggests, our attempt is to deliver process-driven return. What do you mean by process-driven returns? So process-driven returns means that you what investors do not like is the roller coaster ride. So therefore it is very important that you create a process which will deliver consistent returns. And therefore, we decided that we will try and do this for our investors because we have that understanding. We try and do that. So that's why this representation, you see these gears working together, in sync with each other. It's like when you switch on the engine of your car, you see all the parts of the engine starts working in a symmetric fashion, and they start supporting each other. And that is where you get the speed. So processes they have played very important role, irrespective of what is it, which organization that you work for. So we felt that the need of the process, the uh, the outcome, when you have a right inputs and right process, then the outcome is immense. So we always believed in that, and it has worked very well in the past also for us. So we decided that we will evolve, and the evolved punchline of our brand is that we will deliver process-driven returns in your portfolio. The other thing of process-driven return is that there are times we have observed, and I spent about almost 2.5 decades in the industry, and I've seen that there are investors, when they come and invest based on the last 1 year, 2 year, 3 years of performance, what they do not look at is that whether their profile, when I say profile in the sense that the risk appetite of the investor is matching up with the scheme, objective of the scheme of PMS or AIF. And this is where the accident takes place. For example, so we have classified these into three parts. One, we say that aggressive invest. Somebody who's already attained all his goals, achieved everything in life, and just wants to enhance the returns by taking maximum risk. We call them so-called aggressive invest. For aggressive investor, our selection process would be different. But there are investors who are very conservative, very agile, very sensitive to the markets, may not be okay taking a drawdown of more than 10-15%, do not have the stomach to digest that volatility, then we say that they come under conservative category. So we have a different process for conservative category. We have a different process for somebody who's moderate in terms of taking risk, and we have different process for somebody who's taking higher risk, which is so-called aggressive. And therefore, we pay more attention to the process which is built internally, and I'll take you through what kind of process that we follow. Very quickly, regulator is known as father of the industry, and this father has three children. If I have to use a layman language out here for your benefit, for all our viewers' benefit, to give you perspective about this. So first is mutual fund. So mutual fund to sahi hai. There is no denying on the fact that ever since it got regulated since 1996, this has now almost 28 years of track record. And if somebody would have invested, in the low, worst to worst performing mutual funds, uh, he or she would have ended up getting 15% CAGR returns. 15% CAGR returns for more than 20 years. 28 years means a lot, you know. and credit goes to the regulator performing this, regulating the whole thing of mutual fund, and also to some of the large asset management companies and their chief executive officer and chief investment officer. They are the one who traveled to every small cities of India and did many road shows in order to convince the investor community as a whole that mutual fund to sahi hai. And 28 years of track record of delivering 15% clearly indicates that mutual fund to sahi hai. But म्यूचुअल फंड के अलावा AIF और PMS भी सही है, and today we are here to talk to you about that also. So as I said, there are three instruments which are regulated and controlled by your by your regulator is AIF, which is alternative investment funds, PMS, portfolio management services, and mutual. In AIF, the minimum threshold is 1 crore, and for PMS, it is 50 lakhs. And for mutual fund, you can start with as low as 100 rupees of systematic investment plan. And you can participate in Indian capital markets and go about getting a wealth. Now, when you look at the size of the industry, AIF is now reaching about 3 lakh crores. PMS is about 3 lakh crores. And this is, I'm talking about non-institutional money. When you look at institutional money, then AIF would be about 8.5 lakh crores as we speak today. PMS would be more than 20 lakh crores because in PMS you've got about almost more than 10 lakh crores coming from EPFO money, from EPFOs. That's called EPFO money. But let's keep that institutional aside. And then your mutual fund, which has now reached to 65 lakh crores. My apologies, the data is slightly old. So that's just pretty much size about the industry. Moving on to the next slide. The question is, why do we need alternative investment funds and portfolio management services at the first place? What was the need of creating these two different investment vehicles when mutual fund to sahi and it can do very well? And why do we need that? That's the first question. So, the first thing which comes to my mind is why there was a need of creating this is that the regulator wanted to give some more flexibility to these portfolio managers. When I say flexibility, is that there are sophisticated investors and there are retail investors. In mutual fund, you have both. But because mutual fund is managed at the pool level, the fund manager cannot go beyond the limits which is defined by the regulator and go about creating an additional risk or generating an additional risk. And therefore, there was a need for these sophisticated investors. When I say sophisticated, is someone whose portfolio size is more than 3, 4, 5 crores to have a need of the additional flexibility. That is number one. What do you mean by flexibility here? So the meaning of flexibility is that these managers are given the flexibility that if you want to create a portfolio in AIF, you can create a portfolio with help of only 10 stocks. This is not possible in mutual fund, by the way. So why 10 stocks? So is it the 10% in one particular sector or a stock? You can have an exposure. And with the 10, so there are investors who wants to just pick up the high conviction ideas and they are ready for a major drawdown. What will happen when you have a concentrated portfolio? It will have its own volatility. But they say that, look, we are giving you this flexibility as a regulator. But you can't onboard more than 1,000 clients if it is CAT 3 AIM. They want this investment to be supposed to be a private placement. That's very, very important. The second thing is that, and by the way, it's not supposed to be publicly advertised. Somebody asked me a very beautiful question that why AIFs are not so popular. I say it's not supposed to be. It's supposed to be a private placement because it cannot advertise anywhere. So that's how the regulator wants this sophisticated investor to remain on one-on-one discussion with respective wealth management companies or maybe with asset management. The other important aspect is the unique product proposition. When I say unique product proposition is that if somebody wants to invest in real estate market What would you do? If you are a mutual fund guy, mutual fund manager, you would buy a stock of the real estate companies, or maybe some of the developers or infrastructure related companies. But in AIF, you are given the opportunity to go on and invest in real estate market with help of developers. You can buy an inventory, you can go 100% equity, you can go 100% debt by lending money to developers and make double the return of any fixed income instruments are generating, where returns are subject to market risk. But on an average, these AIF category in the real estate, last 10 years have ended up delivering close to 18, 19% or 20% of gross returns. Then the third thing which comes is basically tax efficiency. I won't call it a tax efficiency. I would say that the convenience of the tax, in the sense that in CAT 3, you can pay, you're not supposed to pay taxes at your level, because in CAT 3, the investments are done at the pool level, and therefore the taxations are paid at the instrument level and not at an investor level. The other flexibility which is given to this portfolio manager in CAT 3 or maybe some of the CAT 2 is that you can have a combination of listed and unlisted companies. Now, bulk of the returns are made when the companies are unlisted. I'm sure you would have heard about the story of Oyo or Ola. A lot of investors jumped on to unlisted companies, bought a stake in the company, and as we speak, these valuation of these companies are in 2 billion, $3 billion. They've emerged as unicorn of India. And through QIB or anchor investing, you can create an additional returns. That's about AIF. Exploring the universe of AIF. So AIF, the minimum ticket size, it starts with 1 crore, PMS is 50 lakhs. What is the difference of AIF and PMS? That's one question that I keep getting. Now, the difference is AIF, PMS, and mutual fund is that there are three different instruments. And in AIF, basically, AIF is a good combination of mutual fund and PMS. I'm talking about CAT 3 AIF. Why do I say that? In mutual fund, investments are done at the pool level. In AIF, investments are done at the pool level. In CAT 3 AIF, the NAVs are in mutual fund. The NAVs are declared on a daily basis. We'll have to revisit whether they are allowed to do it or not. So these are the things. But at the same time, they behave like a PMS, because in PMS they create a concentrated portfolio, pick up the high conviction idea, take slightly more additional risk, and end up delivering slightly higher returns. So join the elite community of AIF and PMS. So, mota moti, when you look at this 3 lakh crores, you've got about 1.5 lakh investors who have contributed this 3 lakh crores. And most of them have come from metro cities of India, like predominantly dominated by Bombay, Delhi, Bangalore, Hyderabad, Chennai, and Pune. Now this is going to the CAT 2 city, slowly. And surprisingly, you notice to surprise that investors are coming from even the mid-sized city like Indore, Raipur, investing in AIFs. That's a very good signal. The other thing is the PMS is about 3 lakh crores. Obviously, the ticket size is low. You've got about almost now 3 lakh investors. Earlier, the ticket size was less than 50 lakhs. It was 25 lakhs. So there were more number of investors whose portfolio size is now grown to more than 50 lakhs. So total number of investors are 3 lakhs. And then in mutual funds, obviously, there are more than 5 crores pen, more than 5 crores of folios. So needless to say that has become very popular in India. Now, these are different types of AIFs and PMSs. In category 1, you have startup. Essentially, category 1 invest in startup funds, SME funds, depending upon what kind of SMEs that they're investing, social venture fund. Whereas in category 2, what does not come under category 1 and 3 is basically a quarterly category 2 investments, where it essentially invests in private equities, it invests in private credit fund, which is also known as debt funds, performing credit fund, and also invest in real estate funds or maybe fund of funds. And then you have category three. Now, category three is basically invest in listed companies, but can have exposure to private equity up to 49% of the portfolio. And then you have other equity funds. Whereas in PMS, it is discretionary and non-discretionary. Broadly, discretionary is the discretion. It is a discretion of the portfolio manager to invest on your behalf, and most of the PMSs fall under this category. And then you have some other non-discretionary portfolio also, where it is a discretion of the client to decide finally whether the stock recommendation which is given by the portfolio manager is to be bought or sold or not. That's about PMS. That's a history of AIF and PMS. So AIF was first regulated in the year of 2012. So this brings about 10 years of track record on the table, 12 years of track record on the table. And then a lot of people don't know and might be surprised to notice that the PMS started during Harshad Mehta time. Since 1993, the PMS was happening. Of course, the regulation evolved over a period of time. So in the year of 2000 or 2001, the SEBI started giving licenses to some of the broking houses for managing PMSs. And then you have various PMSs now broadly run by three different categories, which is bank-based asset management companies, broking-based manufacturer, and some boutique portfolio. We've already covered, so as we speak, the total number of AIFs which exist in India is now reached to more than 1,400 AIFs. Some of them are owned by family offices, which is a very good investment vehicle. And on the PMS side, the number has gone up to 400. So there are 400. This is slightly old data. I'm sorry for that. So now number has reached, and every time when I present, the number only goes up. So there are more than 400 portfolio managers, and slowly, you will see the similar trend what was observed in the US, where you will have more number of regional portfolio managers who will be working closely with HNI investors and ultra HNI investors or family offices of their own region and go about creating wealth for them. So even the regulator want this to be little more scattered and so that they can reach out to more investors. That's about process driven. I already talked about this importance of this slide earlier that, when you have a right process, it's like, you go to Pizza Hut, you go to Chennai outlet or you go to Delhi outlet, Pizza Hut, when you have pizza, you get the same taste. So what has worked for them is the recipe and the process of recipe, irrespective of the taste of the water, which is very, very important out there. Same way, we thought when we want to deliver consistent returns in a client's portfolio, what is more important is to let down the foundation and the process of our selection or of our organization. That when you come to us, when you talk to a team of experts, we have PMS qualified professionals working for us like Priyanka, and Sinu ma'am, Sinu and Mukund, they are PMS qualified, certified managers. When they come and speak to you, uh, uh, they are aware about the fact that what is more important is assessing the risk appetite of the investor and based on that offering the solution. So our job is to basically elevate the financial horizon of the lights, empowering the affluent with tailored solution, which is very, very important. So we are absolutely a distinguished player when it comes to investments in AIF, PMS, and some of the mutual funds. So we don't say that mutual fund is bad. No, mutual fund to sahi hai. And we would always allocate some money where, for example, if you want to invest in hybrid fund, there are very less choice of hybrid funds in AIF, PMS. Let's say we want to invest in uh, arbitrage fund, there is no substitute for that. So we will continue to invest in mutual funds. Some of the mutual funds we like also. So we'll continue to allocate money. But depends on investor to investor. What is the goal the investor has, what kind of return expectation the investor is. If you are the investor, we will be, our professional will be, the expert will be sitting with you and creating a tailor-made solution for you. We are committed to delivering unparalleled financial solutions. So we are amongst those who are expert in AIF PMS, highlighting and creating the awareness of AIF and PMSs amongst the investor community as a whole. Excellence is not just a goal for us, but it is a standard. So we do not compromise when it comes to managing our clients' money, because it's a very hard-earned money. We have to be very, very careful about what kind of investments that we are choosing for them. We offer personalized investment strategy. So every investor may have a different need, and based on that, and what is working for us, by the way, why most of our clients are very satisfied with us is that our deep understanding of the market dynamics and proactively approach to the opportunity is going in our favor. Just to give you an example, when we saw that some of our investors have created extraordinary returns in the mid and small cap, we started booking profits from June onwards. And by the way, some of our investors were asking, why did you do that? And post that July, August, September, October of this year was doing very well. And we were losing on because we were sitting on some amount of cash. But I'm glad to share that as we speak today, market fell down and those investors are now appreciating our efforts because we are redeploying their money in equities in a staggered manner. So very, very important for us to take care of the client's portfolio. And 2 or 3 metrics which are being used there. One, we look at what is the broad piece of the markets, and that gives you some sort of indication that what is the last 10 years of P and what is the current P. And we look at that when the P's are beyond the the earnings level. So what we do is we look at 2 or 3 parameters. One, we look at the earnings of the portfolio, and then we look at the P of the portfolio and compare that with market P. So what we like is we always prefer to go with the portfolio where the peg is more than one, and at the same time, peg is your PEG, and at the same time, portfolio is the P of the portfolio is lower, because we see very rare chances of re-rating the P in a particular industry. But wherever we see that there is a chances of P re-rating to take place, that is where we are okay and don't mind buying higher Ps. So it depends, as I said. Uh, our investment process set us apart in the investment world. Uh, we are very much committed. None of our clients would ever say that we've done anything wrong with them, or there is anybody who's allowed in my team to missell any product, not to understand the requirement of the client and to push any product. So we are not a product pushy platform. What we ensure is that we create a tailor-made portfolio, give you the access to these portfolio managers directly, arrange a call so that we are all in the same page, give you complete understanding of the markets, give you different trends altogether. Somebody says that, look, I'm okay taking additional risk. What sector that you are bullish on? Then we say that, look, digital looks to be very good. Infrastructure at this point of time looks to be very good. But it will go through its own volatility. If you are okay, we are ready to do it. So our commitment to excellence in the investment management is evident in our pursuit of innovative strategy and the rigorous risk management practice. So we say that, look, we are your chief risk officer. We don't say that we are a wealth manager. So our job is to ensure that we continuously, reduce risk. Last 3-4 years was a clear cut, scenario where investors have seen extraordinary returns. We saw 2018-19, and from there, the small cap P from 10-11 to inching up to 40s today. So we are very, very careful about these numbers, and we see to it that we've been telling all our clients, ये आपने अच्छा पैसा बना लिया है, अभी थोड़ा कैश में बैठिए, थोड़ा प्रॉफिट बुक करिए, because everyone will tell you when to invest, but nobody would tell you when to book profits, and we are known for that. That's our very, very important process, as part of the process that we help our clients to book profits at the regular intervals. So as we speak, we've got about good 350 HNI investors. This is a slightly old data. Now we've reached to 400 numbers. The AUM has now reached to 650 crores. Those who are those who have invested using our process. You know, and I often come across the client that if I can invest directly, why should I do it through you? Why should I do it? So I say that if you can do it directly, nothing like it. I mean, you're not needed. You come and I'll give you the complete scorecard of the AIF and PMS managers, where our team puts a lot of efforts in terms of ensuring that we give you the complete scorecard of each and every portfolio manager, that what kind of returns they have delivered. If you think that by seeing the returns it's good for you, I would say that you are not needed. Our platform is not required. But if you are looking at creating a sustainable wealth with help of an advisor, where with help of a platform where our expertise can be utilized. For example, I don't want to name the PMS company, but that PMS company delivered the highest return in the last 5 years. During this fall, the portfolio is down by 50% because they were overweight in some of the sectors where we were not comfortable. So I am absolutely fine as long as you can do this exercise for yourself. But if you cannot, then I would suggest not to do this. This is your hard-earned money, especially when the bulk of the investment is so high, the stake is so high. My suggestion would be not to really take too much of risk around it, and always reach out to platform. If you're not comfortable with our platform, you may speak to some other platform. It's absolutely no obligation from our side ever to any of the investors. These 400 investors who have trusted us, there was not a single incidence where any of our expert would have reached out and said that, you should be investing in this product. No, we believe in solution. We are a solution provider. We understand your risk and create your excellent portfolio. And I'll come to that, how do we construct that. So we are trusted by 10 countries. So we have investor coming from Dubai, we have investor in America, we have investor in Oman, then Singapore. Now, so these are 10 different countries where these investors, because they have seen our work, what we are doing, they come and tell me, Vikas, I'll give you the mandate. You decide which manager to choose. Ultimately, what we are looking at is consistent return. And I'm glad to share that we've got about almost 15,000 investors who come and extract the various performances, data points of each of these portfolio managers from our website called AIF PMS. What we do is to create the user ID and password for those investors, and they come and check out the performance of various asset management companies. So as I said, my team collects the data from all the AIFs and PMSs. Most of them, I would say, if not all, because we do not cover some of them. But most of the data points are very easy available, where you can go and compare the performance of those teams. Also look at the various parts. Well, I was talking about this investment committee. So this investment committee is headed by me. And apart from me, we have professional experts, who are PMS qualified uh, professionals and experts who are there on the body of the investment committee. I already told you their names. But more than that, we also have, for the first time, you would have heard this, we also have external people on our platform. We have one of the seasoned investor, whose portfolio size is more than 50 crores, and most of the money have been created with help of AIF and PMS in the last 10 years, and I've been managing his portfolio for my previous company. He happens to be on the board of investment committee. We debate in our investment committee. We may disagree, or maybe we have our house view may be biased towards one particular area. Therefore, it was necessary and essential for us to bring somebody from outside on the board of our investment committee and debate on certain areas and then come out with solution. You know, and we have a very, very rigorous and religiously we do this selection process. Uh, you know, we are prepared for these kind of storm and calms, and our job is to make our client prepared for these storms, which is very, very important because, uh, you know, you get to know, who is wearing what only after the party, so as the Warren Charlie Munger says, once the party is over, you get to see who was doing right or who was doing wrong. So we see to it that we are prepared to protect our investor so that their portfolio does not get affected by major events, such as COVID or the recent past, which has happened now in India. We'll talk to you about the details of the event in the second session. Then we create a personalized portfolio. We bring expertise to the table. We also have consistency score. What we do is, what investors also do not like is the roller coaster ride, as I said. We also don't like that portfolio ranking quartile 1 in the first quarter, and in the very second quarter, it is moving from quartile 1 to quartile 4. No, we do not like those. What we like is the consistency in the portfolio. And therefore, our internal team, the research analysts, they are the one who actually generate these consistency scores, and basis that we select the portfolio. As I said, we are a very, very process driven. So we have an internal framework called 3I framework through which we evaluate the portfolio manager. Now, what this 3I framework is basically that, this looks at three things: the investment style, the investment quality of the portfolio, and the performance. Now, it has to go well hand on hand. For example, when we are looking at, we are a manager centric framework. So we look at fund management team. We look at who is the fund manager. We do the due diligence. We look at the what kind of process they follow, whether they have well defined process or whether they stick to the processes or not. We go to an extent of checking how many stocks have been bought and sold by the portfolio manager. That will give you some idea whether the portfolio manager is running a high conviction idea, which is supposed to be, or buying or selling ideas based on the recommendation coming from their empaneled stockbrokers. We look at the consistency. We look at what is the pedigree of the organization, what is the pedigree of the fund manager. We are not comfortable working with somebody who was managing debt mutual fund for 10 years and suddenly become equity fund manager in the new organization because he got a job out there. We like somebody who has 10, 15 years of track record, well qualified, follow the investment style. Now, what are the investment style? These are different style, like if you are a value investor or a contra investor or a growth investor, whether you are sticking to the style during the bad times or not. Because sometimes it has been observed that when they prepare the portfolio, they say that, look, we follow this particular style, but they ended up buying different styles. The sense somebody says that, look, I'm a value investor, and they will have stocks, whose P would be more than 89. So that needs to be examined very carefully. We've already covered that. I'm not taking too much of time here. This is a media interaction. I'm glad to share that in the last 4 years, ever since we have started, we had about almost 208 weeks, and we have posted 208 podcasts. That clearly indicates and talks about our consistency and our passion, our team's passion to ensure that we educate and empower the investor community as a whole, irrespective of the outcome. So our attempt is to build a platform where we invite these industry experts and read their mind, decode the entire investment philosophy, and share it with all of you without expecting anything. We never came and said that, look, you watched our video, I have your email ID, now you invest with us. We never do that. We always say that, look, if you need our help, please reach out to us. Our team would be give you very honest and modest feedback about whatever we know, whatever our expertise are. But at the same time, if you feel that we are a deserving wealth management team, then you can give us the mandate and our team will manage your portfolio. Uh, we've already talked about tea. This is another example of the process. When you have a process, you see all the biscuits they are like look alike each other, look alike biscuits, which means that when you have a right process, then there are very rare chances that we will lose on in terms of delivering the deliverables in the hand of our investors. We already covered this 3I framework. We talked about the investment committee. We talked about the uncertainty, and that is a time investor needs more confidence. They need somebody like us to speak to them, give them more data points, which will eventually help them to remain be invested in the fund. For example, those who invested 6 months back, their portfolio must be down about 10-15% now. What would they do? What would they do at this point of time? So it's very essential that I tell my team always that reach out to those investors, talk to them, share the data points which will help them to be remain convinced about this thing. This is a very important slide, or maybe the last slide from my side, where we have a internal fund selection process, which we call it SOUL. Now, what do you mean by SOUL out here is that what we look at is that when you are working with these portfolio managers, you need to look at whether the portfolio manager is good at what, whether they bring a good amount of skills and experience of the past of managing the public money. Do they have right kind of knowledge? Are they able to use that knowledge, which also becomes the part of your skill? Or they are someone because the luck has favored them, they did well. I gave you one example that last 4 or 5 years there was one portfolio manager which has done extraordinary, but their portfolio is down about 50-60%. And there are many examples. So what we do is essentially is that we look at very high skillful people, knowledgeable people when it comes to portfolio managers. And we strongly believe that if you have right skill, the luck will favor you. So we always want to be on the right hand side, and we never compromise skill for luck. Soul denotes skill outperformance while avoiding pitfalls of underperformance and luck-based investment. Another example that you cannot be always reliable on luck. An investment based on solely on luck lacks consistency. And I talked about generating the consistency score that we do it. So we analyze the funds in and out, consider the balance between luck and skill, look at whether the portfolio manager is following the defined investment philosophy, or buying stocks very randomly, underlying stocks. Emphasize on proven track record, robust investment process, and drive that basically help us to identify whether they are providing a better risk adjusted returns or they are only delivering the returns. So fund selection process, I already talked about. We have an internal rating system, which is not available in the public domain, where we give ratings to portfolio managers, depending upon their track record, depending upon their past performance. We look at giving them a rating, depending upon the size of the portfolio, depending upon the quality they bring on the table, when it comes to quality of the portfolio. Because we come from research background, as an organization, we are a research-driven organization. We never tell people that they are sales-driven organization. We never give any product-based target to any of our team. We always say that they are all research analysts. We are a data-driven organization. Our job is to bring the data to the table of our investor and explain the rest. Ultimately, an investor is going to take the call on what kind of analysis that we do. Well, this is a testimonial of what our investor says. He is Mr. Avinash Bhandari. Well, he is based out of Ahmedabad. He was the founder and CEO of a listed company. Well, I'm not taking the name of that. Currently, he's a founder of Think North Management Consulting. He shared his example that, when he consulted me, he consulted our wealth management company. Before that, he has worked with many other wealth management companies, and he was frustrated by the lack of suitable solution from the leading wealth management firm. And he was saying that I was skeptical about finding the right fit. However, after meeting Vikas, I mean, me and my team, he was very impressed by his by our meticulous approach. Now, what do you mean by meticulous approach? In the sense that, look, we are not biased towards particular house or particular thing. We believe that how would you create the portfolio? Suppose you invest in one A scheme and a B scheme and assume that your diversification is done. But if they follow the same style, which is growth at a reasonable price, then it is not a diversification, it is actually a duplication. So therefore, very important to create the portfolio like this. So it's been more than now 5 years that I've been working with him about uh, all the AIFs and PMSs without any biases, and then understand my risk appetite and create the unique proposition. For example, if you're dealing with the large fund out and their distribution team, आप बिलीव करेंगे या नहीं, वो अपना एक पोर्टफोलियो आपको जरूर रेकमेंड करेंगे. It has been observed this kind of practices in India. We do not have that kind of practice. We only work with high quality portfolio managers. If you're looking out for short recipe, then you must speak with a team of experts and they will give you another. Then there is Mr. Bipin Dugam, another gentleman. He's a senior drilling and a completion manager. He's based out of Madrid, and he used to have relationship with many large wealth management outfits. Well, we don't want to name them, but ever since he has been dealing with me, he said that he only guided me through the process of the portfolio construction, but has continued to provide unwavering support ever since, which is also important as a wealth manager team, that what kind of support that you're extending to your client, consolidating the entire portfolio, which was, scattered, and ensure that, the financial well-being is well taken care of, and the framework which helped him to create extraordinary portfolio. So he said that over the past 9 years, because I happen to know him from my previous organization. He said, so we've been working together for over 9 years now. My journey with AIF and PMS Experts has been nothing short of delightful. I commend Vikas and his team for their dedication and wish them continued success. So thank you so much. That's about, these are very important slides. So we create a tailor-made solution. You would have seen this ad from Raymond, where, or some of the other companies where they say that, look, we create your tailor-made solution. We offer the tailor-made solution, which is bespoke solutions in our organization. We say that, look, if you don't have stomach to digest the volatility, we will not give you mid and small cap. It is very clear. Same way we offer these kind of personalized services. Funds that undergo the rigorous selection process, I already talked about that. This is our recognition. We were awarded as the best platform for AIFs and PMSs by Economic Times in one of the forum called Financial Freedom Fraternity. And we were also awarded as one of the fastest growing platform. These are the players that with whom we work very closely. Well, it keeps changing. Some of the companies on the AIF and PMS side, which has created well for our investors. We work with Green Lantern, we work with backers. There are many more. We'll talk about that. These are the performance of AIFs. There are performance like a backers emerging opportunity, which has delivered 40% CAGR in the last 5 years. There are PMSs like Green Lantern, which has delivered more than 47% of CAGR in the last 5 years. So mutual fund to sahi hai, but you have AIF and PMS also. Now, these are the solutions that we provide. We have family offices solution. We are managing two family offices in India. We do estate planning completely end to end. So when you talk to our expert team, they will help you create a trust and your money can move trust and start investing from there. And we also provide taxation consultancy. Now, how do we provide taxation consultancy? We are not a team of chartered accountants. So we have tied up with the chartered accountant company who work closely with our clients. So there is a alignment of interest, and we can also have a mechanism where we can track and provide more details to them. So it's like a team that we have created which works in sync with our client, where we provide the chartered accountant. And nowadays, all the services of the chartered accountants are available online. So our investors are very happy that they are working with high quality. Now, this is very important. A process-oriented team. You would have seen uh, maybe in a smaller town when if these kind of beautiful work is done, I'm sure these people would have failed at least 10,000 times or 1 lakh time or 1 crore times before making these kind of things. So when you have when you keep on doing the same thing, there's a saying that if you keep on doing the same thing again and again, you tend to develop expertise over a period of time. And I'm not shying away from the fact that we've also failed as an organization. We have also learned from those mistakes that is where we failed, and we have further enhanced, evolved over the last 5 years. And as we speak today, uh, research process has become only strengthened. So this is like this. So now we, after seeing and touching, the shape is automatically coming. So that's about us. Uh, that's about me. Well, I bring about 2.5 decades of experience on the table. I very often uh, do these kind of podcast with invest portfolio managers so that we educate and empower. So I have taken this goal that I would reach out to as many people as I can in order to educate them and empower them so that they can create wealth for themselves. मेरा ये पर्सनली मानना है कि if I am blessed with this kind of knowledge by God, why not I would reach out to more number of people and educate them without any obligations. Uh, so my life-changing moment was when I attended the Berkshire Hathaway's AGM in Omaha. That was 2016-17, where I learned what is called power of compounding, where if your investments are growing at 25-26%, your 1 crore becomes 10th crore 10th year, it becomes 100 crore 20th year, and it becomes 1,000 crore 30th year. So our goal is to reach out to investors and educate them as much as about power of compounding. Well, it is very easy, power of compounding to understand, but very difficult to practice. So our job is to ensure that we make our client speak about that. There is our team, Mr. Devanshu Bindlis, he is Vice President. We have Mr. Avdut, he is AVP. Mr. Chandan, he manages the team. Stino, she's part of our investment committee. Bokon, and there are many more who are part of the company. So with that, I'd like to conclude the session here. Uh, so thank you so much for your patient hearing, and uh, we would be coming out with more sessions like this. This is the feedback that I got from many investors. So we'll have more uh, videos like this. My submission to all of you is that please subscribe to our YouTube channels if you're looking out for more sessions like this, and share this with your other friends. Write comments in our comment box, like